Have you ever entered a trade because of candlestick pattern only for the market to go the other way? So the topic that we will be covering into this video is what is a fake candlestick pattern, three warning sign of a fake pattern, how to avoid fake patterns, and I'm going to be showing you guys some real chart examples and show you how you can make entries with them or how to trade them. So what is a fake candlestick pattern? A fake candlestick pattern is one that looks like a strong setup, such as reversal or breakout, but fails shortly after. These traps can cause confuse beginners and lead to unnecessary losses. So I'll be showing you guys a bullish engulfing pattern followed by a strong bearish candle. Like this right here. You have a strong bullish candle right here. Looks like buyers is taking over the market and then prices start sell after this closing. So this is a fake candlestick. So it look like strong buyers are in the market. So most traders would have think that the buyers the bullish is it's a bullish market. So most trader will be entering off this land candlestick and then the next candlestick will just start selling and stop them out, which lead to loss. So how I'm gonna be showing you guys how to spot these before you end up losing your trades. So let's get right into explaining. Three warning sign of a fake pattern. A candlestick with no key support, with no key level support. So once you see a candlestick pattern with no key level support, if the candlestick pattern forms in the middle of nowhere, not at a support or resistance zone, it's most likely to fail. So I'll be explaining this to you. So so you guys must be asking, what is a key level? So I will give you a brief explain and I will show you a video that give full explanation. So I'm just going to explain it right now. Quick breakdown so you can understand what we're saying. So a key support is, let's assume what on the chart. So key support, always remember to mark your key support on the 4-hour time frame, on the daily time frame, on the weekly time frame. So your key support is the most resistant, the most resistant touches you get from a zone. So like, let's show a brief example. So like, all right, let's go on the daily time frame. All right, so we're on the daily time frame. So what is key support? A key support is where price give the most touches. So like right here, like before these candle plays out. So we're over here. We're over here at this two top resistance. So you have one resistance right here, one resistance right here, one resistance right here. So you must be asking yourself why when price reach up to that level, price is rejecting. So we're going to be marking out this as our key resistance. That our you have key resistance, key support. So so the key levels are where price get the most touch. So where price bounce off the most. So you have right here price bounce off and price bounce off right here. So that will be a key level. And you have right here price bounce off 1, 2, 3, 4, and you have 5. So this will be a key level right here. So you mark that as a key level. So like down here you have 1, 2, 3, 4. Every bounce off valid. So as long as you see a bounce off, just remember to mark it. So you have bounce off right here, bounce off right there, bounce off right there, bounce off right here. So this will automatically become a key level. So you mark that on your market. So you know this said as an example, if this didn't form, if this wave of candlestick didn't form, and we mark out our key levels like this. You notice when price start buying over here, price breakout, they notice price come down on the key level. So all when price come down on the key level right there. Right there, price coming on the key level and price did what? Price buy, but how to confirm your trade. So if we're on the daily, we'll mark out our key level. So we will be going down on the low time frame, like hold the 1 hour time frame. We're gonna be checking for where price step into our key levels. When price step into our key level, we wait for a candlestick pattern. So like we have a break of this eye, or a break of this eye right there. Break of this eye. And you know price step into our key level. So price will be tapped. You can place this as support and resistance. So we have a support and resistance candlestick pattern. So just mark out our resistance. And here we have it, a good trade. And then price will just push to the upside. And there we have a TP smash. Put SL about right here at this low. Here we have a TP smash. Simple. So I'm going to be show you one more example. So we're currently at 4 hour time frame. So strong rejections. So right here you have let's mark out our key level. So key level right here. So you have price been rejecting off this. Price didn't close. So, this is a rejection. Price reject right here. So price reject right here. Price reject right here. So our key level will be around right here where we get the most touch. So when trading when trading chart pattern with key levels, so price will be buying, example, price will be buying, price reach key levels. You can see a chart pattern right here. You can see a engulfing. You have the bearish engulfing. What price did, price start sell? So when you see the bearish engulfing, it is at a key level that can confirm your trade, so you can get a better entry. What price did price start sell? So that is a great example. So this is how to apply these knowledge to the market and become very successful trader and very profitable trader. You have a weak follow through, a strong pattern with a weak candle after it. That's a red flag. Real move usually follow with momentum. So if you have a strong pattern or weak candle after it, that is a red flag. So this is an example. Price is buying. As you can see, price is buying. But what you're noticing, price is creating a weak price buy, and price is barely closing solid. So you have green green volume candlestick, full buy. Then you start seeing sell candlestick, sell candlestick. Then you have buy, sell, sell. This is showing weak momentum in the market. So I would not be trading this. So this I will be calling this consolidation or zigzag market. So you see prices buying, and what is happening? You have candle are closing small, candle are not closing with full momentum. So I'll be leaving this trade. Price price closed green, but price is closing with a lot of wicks. Price is not closing with a solid body. So these candles are weak. So you cannot be expecting to take trade off these. So price is closing with a lot of wick. The candles are weak. Price closing with a lot of wick. The candle are weak. So when you're trading, only work off the body. Do not work with the wicks. If a wicks go somewhere, do not work with the wicks. Work with the body. How to avoid these fake patterns? Always use confluence. What I mean by confluence, combine chart pattern with structures like support and resistance or trend line to confirm your trades. So right in front of us on this chart, you have a support right here. Support. This is a support. And what price did? Price is in a uptrend. What price did? Price break support. The price was rejecting. Price break support, and come come down, come top, right back into support. And what price did? All you have to do is wait for engulfing candlestick. So right down here, you have a doji candlestick. If you don't understand candlestick, I have a book in the description that is on Amazon that you can go and get to help you understand. So you have a doji right here. Doji mean change. Doji mean market is changing direction. And then you have engulfing candle right here. Remember, we're on the 4 hour time frame, so we expect price these candlesticks to be stronger. So we'll be taking an entry right here at a resistance, which is also a key level, and this will be our entry, and we'll be showing to the upside. And the next step is to wait for confirmation. So price tap into this support zone, which is also a key level, and what don't just enter the trade right after. So you'll see a doji candlestick right here, doji candlestick, which signify change of direction. So what you will be doing is wait for next candlestick to close after that. So if you see a doji right here, and then the next candlestick that close is a bearish candlestick, which is a selling candlestick, don't enter that trade. That chart pattern is fake. So what you wait, if you see a doji, you wait for a next bullish candlestick, which is showing buying. So this is eventually a morning star. So there's two chart pattern right here. You have a morning star, and then you have a doji candlestick. When we see those two confirmation, then we know price is at a level that price is eventually want to move after. So we can expect to take an entry right there and ship to our upside. And, and always remember to look at the bigger picture. Zoom out, don't take trades based on single candlestick without checking the trend, market fails, or session timing. What I mean by session timing, I mean like you have the Asian session, you have the London session, you have the New York session. If you want to know how to put session in your chart, I have a video for that, so you can go and watch that video. Get examples. So these are the session on the chart. You have a New York session, London session, Tokyo session, all that. If you want to know how to put them on the chart, you can go and see the video. The video will be in the description. So look at the market direction. So if we just open the market, what we will be seeing is selling. Like breakout structure right here, breakout structure right here. So what will be going through our mind is that prices create prices in a downtrend, but what you need to do is zoom out on the higher, zoom out on the higher time frame to see what is going on. So when you zoom out on the higher time frame, so look at this example. So you have a breakout structure. You have a breakout structure. So this the bigger picture signify the prices in the uptrend. You have breakout structure right, breakout structure right here. So you know the price is in the uptrend. When price create a breakout structure, what price need to do? Price need to do a retracement. So you can expect this to be a retracement. So always look at the bigger picture before you make entries on the market. So I will be showing an example of a chart pattern that is formed in the middle of the market on a support or resistance level. So example right here you have a hammer. This is an inverse hammer. This means sell. So what, as you can see, this is the opposite of the hammer. The hammer mean buy, and this inverse hammer means sell. So price is currently in a downtrend. Price is currently at resistance level. You have top right here, top right here. This create a breakout structure. So you know price is at a resistance level. So a hammer be forming at a resistance level, which can be a valid hammer. So what you'll be doing is wait for the hammer to close. As you see, an inverse hammer was formed, and then come down with another selling candlestick. So you know that the sellers are in the market. Then you can take an entry. So that is a brief example. Now we show you now a next example with the hammer that formed in the middle of the market. So this right here is a hammer. So this is the original hammer. Say this hammer form in the market, this will be signified by. But you notice when this hammer form, the next candlestick is weak. There is no momentum. There's no momentum in this candlestick. So you know that this is an invalid hammer because this hammer was formed. This hammer was formed in the middle of the market. No support, no resistance. It just formed in the middle of the market. So you can know this is an invalid hammer. But always remember, fake candlestick patterns are everywhere. But now you know how to spot them. Focus on location, confirmations, and trend context to filter out the noise. If this help you get, if this help you out, leave a comment below and subscribe for more smart trading tips. And if you want a candlestick pattern book, it is in the description. And if you want to see the session video, it is in the description. So go and get your book and upgrade and level up your trading skills.